Well, the overall crypto market not doing particularly well right now. I've talked about this in some previous videos, but we are going to go over why the overall market is down as of the recording of this video about 5.5+%. Bitcoin and Ethereum down 6 and 7+% respectively. And I'm going to talk to you about some things that are coming up that you need to be aware of. So that you can just take the appropriate measures. Now, I've talked about this. Here's the bottom line. We are in a situation frankly, it's a situation we've been in the entirety of 2022, where the entire crypto market has been decimated by really macro conditions. Right? We've had the continued fallout from COVID and the supply chain issues helping to drive up cost of goods sold, meaning what it costs you to go out and physically buy goods on a daily level. Obviously, we've had inflation that's been there as well. Inflation is ultimately what it really means is that everything in our life costs more, right? It costs more to go put gas in our cars. It costs more to go to the grocery store. It just simply costs more to live. And that it is that inflation that has created an entire atmosphere of fear, uncertainty, and doubt in us. And ultimately it's a human nature condition that when we are in this state that we tend to want to hold our money and hold in cash. And so that's there's other factors, but that's really the larger picture, right? So that's what's going on. Now, in that scenario, you've got Bitcoin and Ethereum that have both weathered the storm relatively well, but I think we've got some more downside risk coming. So we remember the inflation thing I talked to you about. Yes, that has been the overriding story. It simply is. It has not gone away. It's why I talk about it pretty much every single day, because it is there. Okay. So we still have potential of bottoms for Bitcoin to be around 14 to 16,000, and definitely a bottom for Ethereum, definitely sub 1,000, because the macro conditions are simply still pretty bad with the inflation and all the efforts to try to deal with it and tame it and all those kind of things. So in that, we've got a CPI inflation data report coming probably sometime by the second week of October, and we've got the Federal Reserve is going to meet the first week of November to then set an additional interest rate hike again, per the managing or trying to manage inflation. Okay, so those are some negative, if you will, catalysts that are out there that will impact crypto. But meanwhile, you've got the crypto doing its thing, and we're going to have volatility around that, meaning we're going to have not really a lot of, any kind of a significant green day run, if you will. You're not going to see a lot of green candles, from here until we kind of get what's going to happen with that next Federal Reserve. Yes, there will be periodic spikes, and I'm not trying to be here a kind of a doom and gloom scenario. I'm just telling you the reality of the situation that we're in. And by the way, this has happened to stocks as well. Crypto has lost $1 trillion plus. Stocks have lost 800, trillions and trillions. I can't remember the exact number. I want to say it's 800 trillion, but that's not right. I don't know. The numbers are not quite falling in my brain right this second. Already been a long day. All right, that's what I got for you right now. Just kind of a state of the union. If you are interested, by the way, I would love for you to give this a follow, Freedom 365. There's a link down in the description below if you're interested. This is a new podcast and video series coming from myself and my buddy Zach Humphreys, where we're going to be talking about kind of all things how to achieve financial freedom. That's why it's called Freedom 365. It means the freedom to get your days back for yourself and have 365 days of freedom on a given year and all that kind of stuff. And again, go give it a follow. It's not launched yet. And this is the Twitter page. Links in the description below. I'll see you. I got to go get some coffee. Bye.